Treasurer Earl, thanks mostly to Amy for us borrowing your time on Mother's Day. What changes for women in your budget?
Well, there's a significant women's statement in this budget, and you have to go back more than a decade to find an equivalent document. It will detail a series of initiatives with respect to women's safety, women's economic security, as well as women's health. And today we have a number of important announcements around breast cancer, in relation to screening, in relation to awareness, and new drugs being listed on the PBS.
And domestic violence funding expected to rise as well?
Absolutely.
You're flagging a major assault on unemployment. You want unemployment closer to 4.5%. That's 300,000 new jobs you've got to find. Where are they going to come from?
Well, the labour market's been enormously resilient, Andrew. You have to think back where we were last year at the height of this pandemic. Treasury feared that unemployment could reach as high as 15%. Even as recently as December, with the mid-year economic and fiscal outlook, they were predicting that unemployment would be 7.5% in the March quarter. It's now 5.6%. And we have a historic opportunity to drive that unemployment rate even lower, back to where it was pre-pandemic, and even lower still. And if you compare the labour market's response to this recession compared to the 80s and 90s recession, unemployment has come back a lot faster because we think we'll get to pre-pandemic levels in around 2 years compared to 10 years for the 1990s recession.
Now, the JobKeeper program has been keeping the economy afloat. It was withdrawn at the end of March. What's the latest advice you have there?
Well, that 105,000 people have come off income support in the month of April since JobKeeper ended. You may remember our political opponents said that the sky would fall in if we ended JobKeeper after a year, bearing in mind initially it was a 6-month program which we extended for another 6 months. Again, the labour market has surprised on the upside, showing its enormous resilience. There's $240 billion that's been accumulated on household and business balance sheets that was not there this time last year. That is money that is being spent across the economy. Our tax cuts are flowing through, our infrastructure spending is taking effect, and our skills programs are helping to move people from unemployment into work.
So with those numbers coming down, are we going to see that steady trajectory down also for unemployment, even with JobKeeper coming off?
Well, let's wait for the final numbers from the ABS, which we'll get later this month. But again, the signs so far are positive and encouraging about the labour market, that we haven't seen that cliff that some people were predicting.
Not all of your programs, beginning with Job, have actually been successful. The Job Maker $4 billion program has been a bit of a flop, only created 1,000 jobs when it was meant to be 450,000. Job Trainer has been a lot more successful. Can we expect more in that training area?
You're right, that Job Trainer has been a very successful program, more than 100,000 places already, and that is helping equip people with the skills that they need to find the work that they need. Let's not also forget our wage subsidy for apprenticeships. We put in place a wage subsidy to support 100,000 apprentices, thinking it would take 12 months or longer for them to get into work. We did that in 5 months, and we topped up that apprentice wage subsidy scheme. So we've had a lot of programs that have been designed to support the labour market, JobKeeper obviously being the most significant, keeping that formal connection between employers and employees. The net outcome is the one we're focused on, which is the unemployment rate. It's come down substantially, and again, Australia has outperformed the rest of the world when our employment levels are now back above where they were pre-pandemic.
So when will it be mission accomplished on jobs creation? Is it when wages start to rise again?
The job is not done. This budget will emphasise that we're still in the middle of a pandemic and we need to secure the economic recovery. That's our focus, and there's a lot of work still to do.
Well, you mentioned the pandemic. The Coalition has had its obsession with debt and deficit over the years, for decades in fact. Has the pandemic killed that obsession?
Well, we've had to spend money where it's been required at a time that it's been needed. We've seen the biggest economic shock since the Great Depression. We've seen the first pandemic in a century. We saw very dire forecasts from Treasury at the height of this pandemic. We responded as required. That has helped prevent a generation of Australians going into long-term unemployment. And as I said, the response of the economy to this recession has been a lot faster and stronger than to previous recessions.
But you have changed your tune on budget repair considerably. Is this to cover the fact that there will be a lot of new big spending?
Well, we have sought not to lock in long-term structural spending. There will be additional funding for aged care, for child care, for disabilities, for mental health. Some of those programs involve structural spending, but with respect to our tax relief, our infrastructure programs, our skills programs, that is not built-in long-term spending. We balanced the budget going into COVID-19. That gave us the financial firepower and flexibility to respond as required. Our net debt to GDP levels are around half of what they are in the US and the UK, a fraction of what they are in Japan. We've got historically low interest rates and our economy continues to grow. So we can manage those debt levels. But the contrast with the Labor Party is very clear. They wanted us to spend more than $2 billion a month with JobKeeper going forward. They have a childcare program that targets families on more than $500,000 a year. We're a lot more focused in our responses.
There are going to be structural spends, as you say, though. Aged care is a big one. There's an aching need. Will this budget have more than $10 billion extra spent on aged care?
More than $10 billion over the forward estimates will be in this budget in terms of aged care spending. We've had a Royal Commission which has indicated that the sector is in dire need of reform and additional funding, and we'll be responding to that Royal Commission report in this budget.
And the need will continue beyond the forwards, obviously.
Absolutely, we have an ageing population, and it's not just about spending more money, it's also about ensuring that that money is well spent. And our focus is on governance, workforce issues, the quality of aged care services.
So you say that the economy's roaring back, but what worries you about the economic outlook?
Well, we're still in the middle of a pandemic. That's something that no one can forget. And if you look at the European Union, the euro area has gone into a double-dip recession. If you look at the tragic events in India, it's a reminder how deadly and stubborn the virus is. If you look here in Australia, we've seen Western Australia go into a recent statewide lockdown. So we have to be very vigilant in our response. There's a lot of work still to be done. This budget is about securing a recovery.
You'll be extending the low and middle income tax offset, about $1,000 for the recipients, or up to. Why won't you be bringing forward stage 3 of the tax cuts, as some of your own colleagues say you should?
Well, stage 3 is a very significant economic reform to our tax system, and it's legislated to pass the Parliament. We support it. The question is, does Anthony Albanese support it? It will abolish a whole tax bracket, the 37 cents in the dollar tax bracket, and we'll see 95% of taxpayers pay a marginal rate of no more than 30 cents in the dollar, with one big bracket between $45,000 and $200,000. That's real reform, creating a stronger and a fairer tax system. We're committed to it, but it doesn't come in, as you know, to 24-25.
The Prime Minister said just a couple of days ago that the cost of the NDIS was expected to exceed $26 billion. This is well in excess of anything that was projected. Is it at risk of being becoming unsustainable?
We're absolutely committed to the NDIS. This has been a program that has changed lives, not just for people with disabilities, but with for their families as well. And every person probably watching your program knows someone with disabilities and knows how the NDIS has made a profound difference to the quality of life. So we will always fully fund the NDIS. We're absolutely committed to it.
But is it being targeted by shonks, as the Labor Party suggests?
Well, those ill-chosen words were words from Bill Shorten. I'm sure he's going to apologise for them, because they cause great offence to a number of people who work with great skill and dedication in that sector.
And lastly, when do you think that international borders will be open again?
Well, we'll have an assumption, Andrew, in the budget as to the opening of international borders.
Just on the assumption, though.
But it will be next year.
It will be next year?
It will be
okay,
next year.
because let's just be clear on this. October's budget suggested it would be the end of this year.
And again, this is showing you how fluid the situation is with respect to the virus. But we have an assumption based on the borders opening. It's in 2022, but again, we've got to follow the health advice, and the Prime Minister has repeatedly made that point. We don't move ahead of the health advice. We've got to ensure that our community stays safe, and when we suppress the virus, as we've successfully done, our economy recovers and recovers strongly. That's the momentum we have to continue, and this budget's all about securing that economic recovery and keeping Australians safe.
Well, Treasurer, thank you, and happy Mother's Day once again to Amy.
Happy Mother's Day to all those mothers watching.